Adrian Botham here again from howtoinvestinshares.co.uk. I hope you're well. The subject of this video is what is a stock market? First thing is worth explaining then is what is a market? And clearly a market is somewhere where you can go to buy something or to sell something. So essentially a market is a place where buyers and sellers congregate and they make their trades, either buying, selling or swapping or exchanging something. So a stock market then is a place where you go to specifically trade stocks. So it's where you buy and sell stocks. So what are stocks? Stocks, in very simple terms, are one of two things. They're either bonds or they are shares. Bonds, in very simple terms, are IOUs. So if I want to buy some bonds, then I'd go to a stock market and I would buy some bonds. And essentially I would buy those bonds from either a bank in the form of a savings bond, or I'd buy it from a government in the form of a government bond, or a GILT as they're sometimes called, or I'd buy a corporate bond from a company. And essentially what happens is I would put up a sum of money, say I buy a single bond for $1,000 or £1,000, I give that money or invest that money in a company, a bank or a government, and they give me a form of IOU, a modern form of IOU. So in return for me lending their money, they pay me interest on that bond. And normally there's a date agreed at some point in the future when the IOU is reversed and I get my money back. That's not always the case, but more often than not it is. And in the meantime, as the holder of the bond, as the bond holder, the second advantage of the market is that I can then trade those bonds with other people. I could sell my bond to other investors, or I could have bought my bond from another investor who had previously got it from a bank, a government or a company when it was at the time it was initially issued on the primary market. So that's bonds. The other form of stocks are shares, and essentially these are small pieces of companies. So if I've got a company and I want to raise money on a stock market, I would go to the stock market and I would float either the entire company in the form of an IPO, that's an initial public offering, or I would issue new stock, new shares to the market. So then I'm using the primary aspect of the market to raise new funds. Of course, having issued those shares to new investors, those share investors need a method of trading those shares, so selling them on to other investors as the share prices change. So that's the secondary aspect of the stock market that allows investors to buy and sell shares on the secondary market as opposed to on the primary market. So in summary then, a stock market is a place where you can go to trade stocks, i.e. bonds and shares. And a stock market has a primary function and a secondary function. The primary function is where new shares and new bonds are issued by the primary issuer, that is the company, the government or the bank. And then it has a secondary market where those investors who bought the bonds and shares in the initial primary market can sell them on. Of course, as an investor, you have a choice. You can buy shares or bonds at the initial issue, at the initial time of issue in the primary market, and or you can buy those shares in the secondary market. So that's it then for this video. I hope you found it useful. You'll find lots more information available about how to invest in shares on my website, as well as a free guide. Bye bye for now.